Welcome to Spidell's Federal Tax Minute. I'm your host, Catherine Zidane. This week we're covering the time period for filing an estate tax return only for the purpose of making a portability election. We cover portability in the Overview of Trust session that's part of Spidell's 2023 Trust webinar series. You can sign up for all 7 courses in the series or pick and choose individual sessions, and details are available at spidell.com under webinars. The estate portability election allows a surviving spouse to use the unused estate tax exclusion of their predeceased spouse by electing to carry it forward for the surviving spouse's benefit. Estates that are filing an estate tax return only to make a portability election have 5 years from the date of the decedent's death to file Form 706 and make the election. Previously, estates that had no filing requirement because of having gross income below the filing threshold could make an election within 2 years of the decedent's death. Revenue Procedure 2017-34, which allowed the 2-year filing period, was superseded by Revenue Procedure 2022-32, which extended the filing period to 5 years. The IRS determined that many otherwise eligible estates failed to make the election within the 2-year period and therefore were filing private letter rulings to obtain an extension, at a cost of at least $10,000 just for the IRS filing fee. This placed a significant burden on overstretched IRS staff as well as the estate's bank account. By extending the period to 5 years, the IRS hoped to dramatically reduce the number of private letter rulings being submitted, in addition to providing filing relief for taxpayers with small estates. To qualify for the simplified extension process, certain requirements have to be met. The decedent is required to be survived by a spouse and has to have been a citizen or resident of the United States on the date of death. The estate was not required to file a return under IRC Section 6018, subsection A, based on the gross value of the estate and adjusted taxable gifts, without regard for the need to file for portability purposes. The executor had to have not filed a timely estate tax return. The executor is required to file a properly prepared Form 706 on or before the 5th anniversary of the decedent's date of death. And the executor should state at the top of Form 706 that the return is, quote, filed pursuant to Revenue Procedure 2022-32 to elect portability under IRC Section 2010, subsection C5, Cap A, end quote. If a Form 706 is filed pursuant to Revenue Procedure 2022-32, then an extension request is not required. The estate is only required to file the Form 706 by the 5th anniversary of the decedent's date of death based on the requirements we just covered in order to receive the extension. If a Form 706 is being filed only to elect portability, the Form 706 instructions state that a complete Form 706 has to be filed. Estimated asset values are allowed. If the total value of the gross estate and adjusted taxable gifts is less than the basic exclusion amount, and Form 706 is being filed only to elect portability of the deceased spouse unused exclusion amount, the estate is not required to report the value of certain property eligible for the marital or charitable deduction. For property being reported on Schedules A, B, C, D, E, F, G, H, and I, the executor is required to figure their best estimate of the value. Spidell's Federal Tax Letter is a monthly newsletter plus a searchable online archive of back issues that keeps you at the leading edge of the federal tax issues that will impact your clients, from healthcare to trusts and from LLCs to virtual currencies. You can see subscription information and download a sample issue at spidell.com under Publications. That's all for this week. Join us next time for another episode of Spidell's Federal Tax Minute.